To mining now, and the industry is experiencing a recovery of sorts. After years of cost-cutting, surging commodity prices have helped mining giants boost their earnings. London-listed companies BHP Billiton and Anglo have both reported strong results for 2016. For the last 6 months of 2016, BHP's net profit increased more than 600% to $3.2 billion. Compare that to 2015, when the mining giant reported a $5.7 billion loss over the same period. Anglo has also wiped out its losses and swung back into profitability. The company reported a $1.6 billion full-year net income profit in 2016 compared to $5.6 billion loss the previous year. Anglo also said it no longer needs to sell assets to reduce its debts. But it's commodity prices that are driving the resurgence, with copper in particular showing signs of higher demand. The metal's price has risen by 30% over the past 12 months as production fails to match demand. Joining me now from Cape Town in South Africa is Peter Major. He's the head of the mining division at Cadiz Corporate Solutions, an asset management firm. Peter, thank you ever so much for joining us on Money Talks. Let's talk about the price of metals to begin with. Metals prices, along with commodities and oil in particular, track fairly closely and have been tracking fairly closely in recent years. But these commodity prices seem to have stabilized now and run the risk of possibly stagnating going forwards. Is there a risk to companies like BHP, Billiton and Anglo looking further down the road?
Gee, I think you've summed it up better than every analyst and every investment bank that I've covered the last year. You're spot on with everything you've said. These commodity prices came off such a low base starting 12 months ago, 14 months ago, and they were coming off prices that you only see occasionally in 20 years, but 5 years previous, they'd been the highest prices ever known to man. So yes, they dragged the overgeared and the high cost that most of the companies had down with them. And so, as you summed so correctly, these last 12 months, we've seen the results of 5 years of cost cutting. And the last 12 months, we've seen the results of every commodity that these companies produce doubling. Virtually all of them have doubled in price. But it does look like too much, too quick, and everyone who's really watching this sector is very wary that we'll have these commodity prices 12 months from now.
Now, higher corporate profits don't always translate to higher wages for ordinary workers. In BHP's case, miners at the Escondida copper mine in Chile, the biggest copper mine in the world, as a matter of fact, have been on strike for most of this month. Are BHP's results going to have an impact on the outcome of that strike, do you think?
They definitely are. The unions are very astute, and they're going to use this big rebound in earnings to say, look how rich these companies are, and they're not sharing the wealth. And I don't know what the demands are right now explicitly, but when I saw a few weeks ago what just the bonus demand was, it was something like multiples of the salary. And hey, copper has actually bounced up the least. You know, copper's probably up 20 to 30% from its low of a year ago, but most of these other commodities are up double. And most of these Chilean copper mines have high costs. In other words, $210, $220, $230 a pound. So they don't have that big a profit margin that most of the other commodities do. And these earnings are still very, very down from 3 years ago, 4 years ago, 5 years ago. So it's going to be tricky negotiating, but people have to be realistic.
Peter Major of Cadiz Corporate Solutions in Cape Town, thank you very much for your time.